So it offers fixed wireless and fiber services to wholesale business and residential customers in Australia. It's posted record revenue growth of 55%. And the CEO, Alex West, joins me now. Alex, welcome. Thank you so much for joining us. We may as well pick up where we just left off. Costs. Are you getting costs under control? Are you able to offset some of the inflationary impacts, not only in what you do, but also in the debt that you're carrying?
Absolutely. So we're net debt zero. We have sufficient cash in the bank. But taking on board what Steve said before, absolutely, you have to control your costs. We don't anticipate we'll be raising anytime soon with the price that we're currently trading at. And we have runway to, again, tomorrow to get free cash flow break even by the end of next quarter. But we've seen a 56% improvement half on half. So we're now reduced our free cash flow. And we've also seen net operating cash flows increase by 155% half on half as well. So significantly growing. But you're absolutely right. This is the current state of affairs. We need to control costs. We haven't seen significant increase in inflation, and we've actually managed to, whilst growing revenue 55%, hold our OPEX relatively constant.
Well, you've got a good answer there. I also note your cash balance, is at 21 million, and I believe you've also got a credit facility worth about 13 million. Correct me if I'm wrong.
It's correct,
yeah. What are you holding on to that war chest for then?
Look, we've obviously been very acquisitive over time. We acquired 8 businesses over the last 18 months. The focus at this point in time is to continue to look at potential opportunities, but also integrate. We anticipate that certain opportunities will come up in the current market. Obviously, as people get compressed, unable to raise cash, there might be significant opportunities for us to sort of step in and purchase. But also we're seeing a growth in our products. So with the coming out of the back of the pandemic, we're seeing a demand for high quality, locally serviced internet services in the regions that we serve, which is predominantly out of metro and regional areas, where the NBN hasn't necessarily caught up in the same way that they have in the CBDs.
Yeah, okay. And so some of those acquisitions, the characteristics of which would be expanding the footprint, do they have to be earnings accretive? Like what would you be looking for? Because again, I don't think the market's in a big mood for just M&A for the sake of M&A.
Look, and we agree, and we've paused a lot. So we've actually slowed down quite significantly. Earnings accretive, absolutely. Free cash flow generating, as all of our transactions and acquisitions have been to date. But also with our current multiples, we need to see obviously at least on par, if not accretive. Otherwise we can wait our time.
Okay. And what else is in the strategic plans that you're going to be able to execute in the half that we're in?
Sure. So look, the focus for us over this half is to continue to integrate the businesses that we've acquired and drive synergies. We've actually achieved 190% of our targeted synergies over the last 12 months in acquisitions. So we were originally targeting 500,000 of synergies. We're now 190% times that, so almost double, with another 20% we expect to drive in terms of annualised synergies over the next 6 months. And that's through turning off platforms and networks and just making ourselves more efficient. We're also going to continue to focus on our customer obsession. So we have incredibly high customer satisfaction reviews on sort of Google and Facebook, which is typically where people go to make buying decisions on residential. And we're also seeing an incredibly low churn. So we're at 0.8% of our base in what's considered in our industry about 2% would be industry average. So we're well below that. So focusing on that. We're also going to focus on sort of our higher margin products. So we now have 5G fixed wireless in certain key areas in WA and Victoria that's now offering speeds of sort of 250 meg to a gig, which drives higher ARPU. So just delivering on those plans.
What's with the share price though, Alex? I mean, we just had the charts up on screen. We'll bring them up again. Like if you're doing everything right, you're making these acquisitions and they're earnings accretive, and you're controlling costs and you've got money in the bank, you're not going to be raising capital. Like what is the market missing?
Look, we are a small cap tech stock, so I think we're trading in with the rest of our peers. And at this point in time, I think people are cautious. We haven't been listed all that long. We only listed in May 2020, so only one full year. And so we're expecting, obviously, as we continue to deliver, and we've delivered sort of 122% compound annual growth rate on revenue over the last 3 years, and increased our EBITDA both organically and through acquisition from nothing to $7.3 million in that same sort of period. So look, for me, it's probably just getting the message out there and making sure people are aware that we exist and that we're obviously still performing.
And when you talk about, not seeing a slowdown or seeing, a lot of adoption of your services, are you not vulnerable at all in a economic slowdown? Do enterprises not start to pull back? Have you seen any evidence of that?
Sure. Look, with the pandemic, people are obviously working from home a lot more. And even coming out of that, people are still moving to more of a hybrid. So quality internet services at home have been somewhat both inflationary and sort of slowdown independent of that. People are obviously looking to save cost. But because we're delivering a lot of it on our own network, at least 50% of our services are considered on net, we don't suffer from price compression as much. We're able to sort of match our pricing while still holding our margins high. So we actually are still seeing an 11% growth in those type of services.
All right. Well, Alex, thank you for coming in and explaining the update to us. Appreciate your time.
My pleasure. Thank you for having me.